Devarsh sir, we are live now.
Okay. Good morning and very warm welcome to everybody to this fortnightly market outlook webinar. I am Devarsh and I am joined by my two colleagues, Nandish and Vinay. Good morning, Nandish.
Good morning, Devarsh. Good morning, all.
How are you doing, Vinay?
Yeah, I'm fine, Devarsh. Thank you and welcome you all in this webinar.
Okay. So, without further ado, we'll start the webinar. Is my screen visible?
Yes.
Okay. So, once again, this is our fortnightly market outlook webinar for HDFC Securities and HDFC Sky's customers and our colleagues. So the most important event which happened was on US FOMC. The headline inflation has now come down and market was expecting that it is so close to this range that the Fed will start cutting the rates. The expectation was that from 4.4%, the interest rate will come down by another 1% and it will go down to 3.4%. That was the market expectation. But after the recent FOMC meeting, FOMC decided that there is considerable trade related uncertainty in the new regime, which is going to be there under the president elect Donald Trump. So, what he has done, instead of indicating for a 1% interest rate cut, now there is only 50 basis point interest rate cut expected, and global markets and our markets had to adjust to this reality. So, what happened is that this is being factored in. We know that the cost of capital determines the multiples in the market. If interest rates are lower, stocks trade at higher valuation. If interest rates are higher, stock go down in your valuation. And that correction has been happening in last 7-8 sessions across the globe in India. And now we are more or less there where market have discounted that interest rates in United States will go down only by 50 basis points. Now, these things can again change after 6 months of Donald Trump's presidency. If he doesn't enact policies which doesn't lead to higher inflation, then these plots can change. But currently, that is the situation. Based on that, what has happened is that in last fortnight, US markets have come down by about 2%. And US, mind you, is now most dominant market in the world. Around 50 to 60% of the global market cap is concentrated in these only indices, and within these indices, Magnificent Seven command a lion's share of global market cap. So if that seven companies get impacted, obviously the global markets are impacted. So what we have seen in last fortnight, across the board correction starting from US and other parts of Europe and Asia corrected. And in India, as you can see on the screen, about 5% correction has happened into Sensex and Nifty, while Nifty mid cap and small cap has little bit outperformed, but still they also brought the bear of the correction. If you look at the performance over the last 1 month, what we are seeing is that the Nasdaq has outperformed the market, and especially the companies where large companies based on Nasdaq technology giants have given good results, and that's why they are outperforming compared to the economy facing indices. In Indian market also, we had a deep correction in the beginning of November. At the end of the November, from there we went up, and now we are more or less back to those levels. Markets are up only about 1% from the last November month, last week of November month levels. Again, mid cap and small cap outperformed over the last 1 month. We see that the mid cap is up about 4% and small cap is up about 6%. So that is the picture. Now we are looking at, this is the situation, this is the current state. Now, what is it? Charts are indicating, derivative data is indicating to us over the next fortnight. I'll invite my colleague Vinay and Nandish to share, and in the end, I'll come back and we'll try to summarize the content. So over to you, Vinay.
Yeah, thanks, Devarsh bhai. Hope my screen is visible, Devarsh bhai.
No, actually, your audio video is good. You need to start sharing the screen. Let me first stop it here. Now it is visible. Go ahead.
Visible, right? Yeah. Yeah, so welcome you all. And through this presentation, I would like to show you the technical setup of different benchmark indices. And we will also share insight on global market technical setup, and we will do also some intermarket analysis. So let us just start the presentation. Yeah, so first we would see a chart of Nifty daily. So Nifty short-term charts. So basically Nifty has violated the key moving average supports. So in this week, for last five consecutive trading sessions, Nifty has been falling. And from the recent top of 24,800 odd, we have corrected more than 1,200 points. So there has been a weak setup of the technicals, and Nifty has violated the important key moving averages of 20, 50, 100 and 200 days EMA. So yesterday we saw Nifty violating the crucial support of 200 EMA and closed below that, in fact. So there has been one trendline support also which adjoins the 4th June, the election result outcome low, and the recent November low. If we adjoin these two bottoms, then there is a upward sloping trendline support around 23,500, which was violated in yesterday's trade. So the close has been weak for the Nifty, and Nifty has is on the verge of making lower bottom below the November low. So the setup is quite weak. The oscillators and indicators that we have been tracking, that has also gone, in fact, turned weak. And you can see over here RSI and MACD both have turned southward and looking weak. So the closing of the weekly closing of the Nifty is not that good, and we closed below important moving average support. So that's a bearish sign. Now we would like to see how positionally Nifty is looking at. So if we adjoin, this is a weekly chart of Nifty. If we adjoin the October 2023 low with the 4th June 2023, which was the election result outcome, this upward sloping trend line comes around the current levels only. So the Nifty is placed at 23,587 right now. And this upward sloping trend line, this is a medium term trend line on the charts, on the weekly chart, which gives support exactly at the current levels. So we can say that Nifty has closed near the important support level of trend line. Now, important things to see is the whether this 23,500 level is breaking in the coming days or not. Because if this level were to break, then the next immediate support comes in at 23,263, which is a 18 November low. So 23,263 is an important swing low that should act as a strong support for the Nifty. And in if Nifty breaks this point 23,263, it will confirm the lower bottom formation. Lower top is already formed near 24,850. So this was the all-time high. After that, it fell and attempted a recovery, but it failed to cross the previous high and made an intermediate lower top at 24,850. And if Nifty breaks now 23,263, then it will confirm the lower top, lower bottom formation on the weekly chart, which is a bearish sign. So we need to see whether this level holds or not. So we are at the crucial juncture. At we can also say that we are close near the long-term support, and further weakness could intensify the selling pressure in the coming days. We will also see the how broader markets have been doing. But before that, I would like to show you the Bank Nifty setup. So Bank Nifty has already seen a fall of more than 2,300 points from the, or in fact more than 3,000 points. So recent top was around 54,000, and now Bank Nifty is trading near 50,800 odd levels. So there has been a sharp fall in last five trading session, and now this 200 days EMA for the Bank Nifty is placed at 50,400. So Bank Nifty has been outperforming relatively as compared to the Nifty, and it is still above its 200 days EMA, exponential moving average. 200-day EMA for the Bank Nifty is placed at 50,400. That is the immediate support for the Bank Nifty. Previously, in the November month before the Maharashtra election announcement, Bank Nifty exactly found support at that level and turned northward, and we have again reached to that level. So we have to give respect to the support of 200 days EMA, which is placed at 50,400. Now let's try to understand the positional setup of the Bank Nifty. Now the long-term support can be seen over here, 49,600. So there was a clear cut. This is the August September month bottom, And again, in the month of November, Bank Nifty found support near 49,600, 700 range. So there is a triple bottom formation around 49,600 to 49,700, which is a very horizontal trend line support. And this is also a upward sloping trend line which adjoins the October 2023 low to 4th June low. So there has been upward sloping trend line, the horizontal trend line, and both these trend lines are actually projecting a strong support at 49,600 to 49,700. If this were to be broken in the coming days, then it will be a positional bearish sign for the Bank Nifty. And in that case, we can expect a further weakness and intensify of the selling in the index. So this needs to be protected if medium to long term trend has to sustain on the upside. So this is a very crucial support. So as I said, 50,400 followed by 49,600 to 49,700. These are the two important and key support areas for the Bank Nifty. Now let us understand the small cap index chart. So before the Maharashtra election announcement, this small cap index made a bottom and started recovering. And after 25th November, that was the announcement of the Maharashtra state election results. Then it started its rally, and this rally lasted for 14 consecutive days. And Nifty small cap index has actually made an all-time high. And from the all-time high, Nifty's the small cap index started correcting. So if we take the entire up move from the November low to the recent high all-time highs, the small cap index has corrected 38%. Now the next support lies at 50% and 61.8%. So though there has been fall in the small cap, but it has not been that much weak because small cap index was outperforming the Nifty and Bank Nifty. So the relative technical setup of small cap is still stronger than Nifty and Bank Nifty, and some sort of stability or recovery in the market can again take this small cap index outperformance resumption. So if market sustains at this level and bounce back, then we can expect small caps to outperform in the coming days. Now let us understand some global market setup. So this is the emerging market index. This is MSCI emerging market index weekly chart. So this is the upward sloping trend line. This is a red trend line. You can see this adjoins the October bottom to June bottom, and this has also reached to this upward sloping trend line support. So emerging market index has fallen by 10%, and after falling this much, it has reached to the long-term support. This horizontal trend line also projects the support near this current level. So we can say that global emerging markets, the Asian as well as the emerging markets, have reached a crucial support, and from recovery from here cannot be ruled out in the emerging market. And we already seen that Dow Jones yesterday bounced back after the sharp correction, and Gift Nifty is also suggesting a higher opening of 130 odd points. So we need to review it, and we need to be conditional about the taking further view from here. Now this is a developed market chart. So basically, developed market chart, that means we are taking an index, a benchmark index of US as well as the Europe. So this is the MSCI World Market Index. Now, as we can see over here, for last 2 consecutive weeks, there has been fall in this index, but it has not actually violated the long-term support. So though there has been a correction, but the correction has not up to that it violated the support. So it's still the long-term support is still intact, and we can expect a recovery from this level. So unless this line, upward sloping line, is broken, we can expect a bounce from the global market as well, as they have already seen a sharp correction in the short term. So bounce cannot be ruled out in the global market as well. This is one of the asset class, or not asset class, but the underlying which is impacting the different asset class across the globe. This is nothing but the dollar index chart. So dollar index has actually moved up from 100 to 108, and this is negative for the emerging equity market sentiment as well as for the bullion like gold. So if dollar index continues to rise, the emerging market equities can remain under pressure, and gold can also see a correction. So, and we need to see whether this 105 in the dollar index is holding or not, because any level below 105 will again resume the downtrend in the this dollar index, and the sentiment in the emerging markets will improve. But as of now, it is showing that it is clearly into uptrend, and it is a negative sign for the emerging market equity sentiments. So to sum it up, I would like to conclude here. Nifty has been falling for last 5 trading session. and registered a fall of 1200 points. And 24,800 is a recent swing high, which is a lower top for the Nifty. Nifty has violated the key moving average support of 200 days EMA along with the 20, 50, and 100. Below 24263, lower bottom and upward sloping trend line on the weekly chart will be violated, which is a positionally bearish sign for the market. 24,000, 24,100 is a strong resistance for the Nifty. And unless this is taken out, we should remain cautious and sell on rallies approach can be taken for the traders. So 24,000, 24,100 is a strong ceiling for the Nifty, and that can act as a strong resistance. Bank Nifty 2 closed on a weak wicket. Immediate support for this index is 50,400 followed by 49,600. Small cap and index has retraced 38.2% of the total rise, which started from November. Now, index is still above the long-term moving averages. So, if market sustains or bounce back from here, we can expect outperformance from the small cap index because relative setup is strong. World market index too witnessed sharp fall recently, but still have the long-term trend line support near current levels. So we can expect bounce there also. We need to review it whether the support is getting violated or not. But till then, we can expect a recovery from the US market. In this uncertain scenario, sectors like pharma and healthcare could outperform. So in Indian market, the relative setup and technical setup of pharma and healthcare index is quite strong. So we can expect outperformance from these sectors. Gift Nifty, as I said, is suggesting higher opening of 130 points due to a bounce in the US market yesterday. So therefore, further weakness can be expected in the Nifty only below 23,500. So yesterday's low of 23,537 is an immediate support. We can take a round figure of 23,500. If this is violated again, then we can see immediate move towards 23,000. 190 to 23,260. This is a support we see, a strong support zone derived from the multiple evidences. So 23,200 to 23,263 is a strong base for the Nifty. This should not be violated to sustain the medium to long term uptrend in the Nifty. So positional support below 23,200 could be 22,800. So these are the important levels that needs to be tracked. And this is what I wanted to share technically. And now I would like to hand it over to my colleague Nandish, who will share insight from the derivative perspective. Nandish, over to you.
Yes, thanks, Vinay. So is my screen visible?
Yeah, visible. Your screen is visible.
Okay. So good morning, friends. Again, I am going to share how the market is looking from the derivative side. So let's start away the presentation. So first of all, during the week, Nifty fell 4.77%. This is the highest weekly fall in percentage terms since 17 June 2022. So basically, we have witnessed a sharp fall in the Nifty and Bank Nifty during the week. From the derivative side, we have seen short build-up, where we have seen 16% rise in the Nifty futures open interest, with Nifty falling by 4.8%. So there was an aggressive short build in the Nifty futures. Same way in Bank Nifty also massive short build-up we have seen, where open interest risen by 26%, with Bank Nifty falling by 5.27%. Amongst the option, we have seen call tightening at 20,800 and 24,000 levels. So this indicates that on the higher side, 23,800, 24,000 level to act as a strong resistance. On the lower side, we have seen put tightening at 20,500 levels, followed by 20,200, 300. This suggests that below 20,500, we might find support in the range of 20,200 to 300. As you can see from this option distribution chart, we have seen massive call lightning at 24,000 levels, followed by 23,800 levels. So that level is likely to act as a strong resistance. On the lower side, in the near term, in the near levels, this 20,500 is likely to act as a strong support. As global markets are strong, and as Vinay said, Gift Nifty is suggesting higher opening. We need to see whether this level holds or not. But if we were to close below 20,500, then we believe that Nifty is headed towards 20,200, 300 level, where we have seen put writing. Coming to FIs, we all know FIs again turned seller in the index future. So during the week, FIs have created fresh shorts. They net shorted worth rupees 6,000 crore, with their open interest going up by 54,000 contracts. So the FIs who were short, they again created fresh short in the last week. And if we were to see the breakup, they have created shorts in both Nifty and Bank Nifty futures. And that's why their long to short ratio fell to 0.45 levels from 0.70 levels last week. This long to short ratio is lowest since 21st November. This suggests that FIs are still aggressive shorts in the index future segment. As you can see from this chart, their long to short ratio was at 0.7. In all 5 days, they have created fresh shorts, and that's why their long to short ratio fell to 0.45. So FIs remained aggressive shorts in the index future segment. Coming to outlook, as we have seen, there was aggressive short buildup in the Nifty futures, aggressive call writing at 20,800 to 24,000 level, and that's why the put call ratio fell sharply to 0.80 levels. And short buildup by FIs in the index future segment indicates that one should remain cautious till Nifty closes about 24,000 levels. On the downside, as I discussed earlier, there is a put writing at 20,500 levels. So you might find support, Nifty might find support around 23,500 levels. If we close below 20,500 levels, then we might see further unwinding, further short buildup, which could drag Nifty towards 20,200, 300 levels. But broadly speaking, we are in the range of 20,200 to 24,000 levels. Any close above 24,000 level or below 20,200 will dictate the clear trend. Till then, we believe that we are broadly in the range. About 24,000, you should go aggressively long, and below 20,200, you can go aggressively short. Coming to Bank Nifty also, as I discussed, 26% addition in the Bank Nifty futures, which suggests massive short buildup. Put call ratio also, which was 0.94 last week, fell sharply to 0.52 levels on the back of call writing at 21,000 to 51,500 levels. FIs, they remain seller in Bank Nifty futures also. All this data indicates that one should remain cautious in Bank Nifty also, with stop loss of 51,500 levels. On the downside, 50,500 is a support where we have seen put writing. As you can see from this chart, 50,500 is the level where we have seen put writing. So this is going to act as immediate support. If we were to break 50,500, then we may go down to 49,500 odd levels. But as of now, for Bank Nifty, 50,500 is likely to act as a strong support, and 51,500 is likely to act as a resistance where there is a highest open interest in call segment. Coming to sectors, many of the sectors witnessed short buildup. Auto, banking finance, cement, FMCG, and media. All these 5 sectors witnessed short buildup during the week, while pharma is the only sector where we have seen long buildup. So this is all I want to share from the derivative side. Over to you, Devarsh.
Okay. Thank you, Nandish. Is my screen visible?
No.
Yes, visible, Devarsh.
Okay.
Okay. So now let's come back to our markets and see what has happened in our market over the fortnight and over the last 1 month. And then we'll talk about what to be done in our markets from 2025 perspective. So first, as we can see, over the last one, there is a big divergence within the sector, and this is going to continue for next couple of quarters as well. Here we are seeing that some sectors like IT, consumer durable, and realty have done relatively well, while auto, metal, and FMCG are struggling. If we see the last fortnight, metal and power have had a very sharp correction compared to FMCG, real estate, which also have come down, but not to the extent to which other indices have come down. Now, healthcare has been the safe haven where a lot of money has been parked, and that's why it is more or less flat. What are the important key takeaways from the market is that gradually from June 2013, see from June 2022 to June 2023, FI have been net buyers, and their net investments, which were highly negative, has started coming into positive from the last trailing 12-month perspective. Gradually, whatever they bought in June 22 to June 23, gradually they've been started selling. Earlier, the pace of selling was very normal. They were buying and selling. So the numbers were near 20. Gradually, the number has started coming down, and we are more or less near only net 2 billion investments over the last 12 months. That means almost $18 billion worth of stock over the last 12 months have been sold by the foreigners into Indian markets. They have gradually reduced their position, and we feel that this trend is almost at the fag end. We are hopeful that in 2025, emerging markets may get a higher allocation, and within that, India will also get its fair share of money. So we are at the fag end of this year. Most of the selling, which was about to happen, has happened. The global markets have rebounded. So there is a chance right now, trend is weak. We are going down, but we are near the support. Routine economic data is expected. Now, we recently did our annual colloquium, and where we have shared, our institutional research team has shared that these are the areas where we are relatively bullish compared to the other parts of the market. And I'd like to share that BFSI is the space where we feel that the maximum amount of margin of safety is there. The growth is going to be there in affordable housing, in two-wheeler loans, and large banks are now trading near a very attractive valuation. So we feel that right now we are at the fag end of 24. In 2025, compared to other parts of the market, BFSI space should do well. That's the sector where we will focus and try to identify many stocks in the year to come. Another one is that the government has actually not spent money which was allocated in the budget, and this next 3 to 4 months, the December month and January, February, March, these 4 months, government is trying its best to spend as much as possible to meet the budget estimate of fiscal deficit. That means because of the floods, because of the monsoon, because of the election, they have not spent the money, and there will be tremendous pressure on government departments to issue as much orders as possible. And in FY26 also, the government will go aggressively in the first half so that they do not end up with this situation. That means from 1st of December to maybe June, we will see companies across the industrial and infrastructure sector announcing large orders, and that will help these companies. So apart from BFSI, we are also bullish on industrial and infrastructure stocks for this 2025. Is my voice reaching you?
Yeah, you're audible, but your video has somehow stopped from here.
Achha, because there seems to be problem with the Zoom, but I'll continue. Can you see my screen?
Yeah, screen is visible and audio is also there, but you can switch off your video and go ahead.
No, the Zoom has actually hanged. Zoom is not working. But anyway, I'll continue. So can you see the IPO frenzy screen on the table on the screen?
Yes,
Yes.
yes, it is visible.
Yeah. So one of the things which has happened in the review of 2024, IPOs have taken a center stage. Bajaj Housing Finance attracted almost 90 lakh applications, and that record was broken by Vari Engineers with almost 97.3 lakh applications in a single IPO. So almost 1 crore 1 crore investors are basically active in the IPO market, and this is the frenzy which is leading to a lot of new IPOs. See, there is demand, and in order to cater to this demand, huge supply is coming. Many of these companies do not deserve this valuation. Many of these companies are not going to sustain
Omkar, Nandish, is my voice reachable? Audible? You
Yes,
are
your
on
voice
mute.
is reachable. Your voice is reachable.
Omkar, are you there?
Yes, yes, yeah. Please tell
What
me.
happened to Devarsh bhai? Because he's been disconnected, I think.
Yes.
I'm checking here.
Is he joining back?
No, he has not joined back. Maybe some network connection issue at his place.
A lot. Let me call him.
I have called Nandish.
Okay.
Yeah, Mr. Devarsh is trying to connect again. There was some technical glitch. He is trying to connect again. Omkar, what's the status?
No, no, he has not joined yet.
Vinay, is he joining?
Vinay, I just spoken with Devarsh sir, so he is joining in 2 minutes.
Okay.
Yeah, so I request all of you to be there because of the technical glitch. Mr. Devarsh has actually left. So he is trying to connect and he will be there in 2 minutes. Please be there. So till then, Nandish, I would like to ask you about any sector which you like can outperform in the coming days as per the derivative data.
Yes, so as I discussed Vinay earlier, pharma is the only sector where we have seen short, long build-up. Otherwise, all the sectors have witnessed short build-up. So from derivative side, it's better to wait for market to bounce back and then we go for some sector. As of now, pharma is the only sector which may outperform in the current downturn.
Yeah, and technicals are also suggesting that relative strength is there in the healthcare and the pharma index. So the technical setup is quite strong. But if market continues to go down the way it has been in last 5 days, then the sectors like pharma healthcare could also see a selling pressure, or at least they can stop rising from here. So we need to see whether the benchmark index is getting stable or not.
Yes.
Otherwise, the outperformance will actually be negated also. So if in case of bounce back or consolidation in the market, we can expect some outperformance coming in the healthcare and the pharma index. The high beta sectors are a bit looking weak, like auto. This auto sector is looking weak now. PSU have started showing some weakness. So though there has been a healthy fall from the peak, so they are looking oversold too. But in the momentum scenario, they can underperform, and the sector like healthcare and pharma can outperform. Yeah, so I think Devarsh bhai has joined back. Devarsh bhai, over to you.
Am I audible?
Yes, you are audible, Devarsh bhai.
Okay, sorry for the technological glitch. I bought this new tablet and it is acting funnily. I hope it is now audible and visible.
Yes.
Okay, so what I was saying is that the stocks to accumulate over the next 2025 is that these six large stocks should be accumulated and 60% of the money should be allocated towards large established companies who have um seen multiple cycles, who have seen business grow over the years. Apart from that, 40% of the money should be also invested in smaller stocks, mid cap and small cap. And those mid cap and small cap ideas, we like four sectors. One is the gas sector, another is the real estate, third is the consumer and consumption theme, and fourth is the new age platform theme. So we have chosen sample stocks: MGL, Shubha, Crompton Greaves Consumer, and India Mart International. So these are the four representative samples of the four areas where we are likely to see outperformance over the next year 2025. So large established companies and some mid cap small cap, if you keep accumulating over the next year, we are likely to see these investments bear fruit over next 2 to 5 years. That is the idea that which we have shared recently with um, various investors across the board, and that's the message which I would like to pass on here, that we are going to have we are already having challenging time. It is better to be little cautious on the markets. We have come down to a good support. There are indications that we may open higher on Monday and start rising. Unless we break the recent levels which Vinay and Nandish shared, we need to be little bullish about the shorter term outlook. Unless we break the higher levels indicated, then it is likely to be choppy and range bound. So that's what we wanted to share with you. I think now we can move ahead with the question and answer. Let me see if we can get some questions going. Yeah. So, question and answer session, we can start. If you have any question or you want to ask any question, you can put it in the Q&A or the chat, and we'll be more than happy to answer those questions. Do you see any questions? Because I reconnected, I may not be able to see the past questions. Okay, what is our view on FMCG stocks? So FMCG, Shreyas is asking, our institutional research team was very bearish on and rightly on FMCG stocks. Now lately they have started being little positive on the sector. The sector or the companies who has higher exposure towards the rural India should likely to do well, as urban consumption is actually slowing down and it is problematic area. But the rural area, we are seeing the first sign of green shoots. One of the FMCG companies is the Hindustan Unilever, which is one of the largest and most prominent marquee company. We think that it has 50% of its exposure revenue comes from the urban India, 50% of the revenue comes from the rural India. So we have recommended that company as one of the stocks to accumulate. State Bank of India, Punit, is there as one of the sectors where we are bullish. BFSI or the banking and finance do include banking. When we say BFSI, that means banking and financial sector. So banking is part of our one of the biggest picks for 2025. Neville Kumar is asking about defense and railway. So the what history suggests us that the stocks which has outperformed over the last cycle usually do not perform in the next cycle as a market leader. Defense and railways were one of the picks. They have done well. They have a good fundamental backdrop. They are likely to do well, but they may not lead the new rally from here. There are stocks which will continue to do well. PSU as a theme is going to do well, but do not expect them to be best outperformers. Individual stocks, depending upon their fundamentals, continue to do well. 2025 is going to be the year of stock pickers. If you happen to pick a good stock, you will make good money. If you pick a wrong stock, you will lose a lot of money, and that is what we have seen in 24, and same is likely to continue in 25 as well. Auto sector as a theme, we are very cautious. So one of the themes where we should move away is gradually automobile sector. Reliance Industries, as it is under our coverage and it is recommended as one of the Diwali picks as well as a New Year pick, we can say that after from 1600 odd levels, stock has corrected to 1200 odd levels, 25% correction has come, and over the next 5 years, company has given a guidance that they would like to double their operating profit. So here is a company which is the largest company by revenue, largest company by the market cap, and they have given a guidance that they would like to increase their operating profit over the next 5 years by a factor of 2. So for a long-term investors, 2 to 5 year investors, it is make a good sense to accumulate Reliance Industry over the longer term, as we have mentioned in our Diwali and New Year pick. Within the oil and gas, we like gas sector. The question is from KG. Ashok is asking, down the lane in next 1 2 years, the return would pair in absolute term, won't they? Yes. The message of 2025 is that we have to tone down our return expectations. Many of the investors who have entered the market over the last 4 years, they have bet on mid cap and small cap, and more risk you take, more return you have made. That is not the case, as we have seen from last couple of months. If you bet on a wrong stock on a mid cap and small cap, there are stocks which have gone down already 30, 40, 50% also. So it is important to choose stocks well, important to diversify. In a portfolio of 10 ideas, 1 or 2 will go wrong in 2025. So 20-30% stocks will underperform. But hopefully, if you pick more good stock in 6 to 7, then those 6 to 7 stocks will give you more return than the losses you make in the other 2, 3, and then eventually you will make good money in 2025. Vinay, there is a question on Bank Nifty. In the range of 52,000 to 50,000 since June, any breakout or breakdown will decide what are the important levels. I think you have shared it, but you can again go.
Yeah, so as I said, Bank Nifty has witnessed a correction of 3,000 points from the recent peak, and it is trading near its 200 days EMA. The immediate support for the Bank Nifty is 50,400, and the far support, the positional support, as I said, there has been a triple bottom formation around 49,600 odd level, 650, 700, you can say. So that is a positional support derived from the horizontal trend line support, as well as we can say a triple bottom support. And there has been another evidence of trend line, upward sloping trend line on joining the October and June 2024 low and swings. So yes, 49,600 is a very strong support. If that is broken, then we can expect a positional downtrend in the Bank Nifty, which could take it further down. And in that case, the lower levels will be far from the that level. So it will be a positionally bearish trend for the Bank Nifty, and it will drag the index much lower than the recent correction. So that needs to be protected if bulls have to be is to bulls needs to be see a bounce. So let's see whether that level holds or not. For 49,600 is a very strong support.
We won't be able to take individuals position related stock specific ideas or questions. So we'll refrain from talking about your own position related questions. There is a query on weakening of INR against USD. So US dollar has been strengthening as shown by the chart. US ICE dollar index has gone from 100 level to 108 level. The support is at 105 level. As long as US dollar keeps rising, it is detrimental to emerging market, detrimental to other asset classes like gold. We feel that in 2025 we may not see. To 2024 has been relatively very good year for rupee. The rupee has not depreciated that much compared to the other parts of the Asian and emerging markets. So we have outperformed, or we haven't deteriorated or depreciated compared to our past. Also, we have been fairly stable for 2024. Same is likely to be 2025. We have good forex reserves. We have the policies where interest rates are not cut compared to the other parts of the world. So gradually we are witnessing a lot of flows. 2025 June 24 was a remarkable year in the sense that India for the first time got added to the emerging market, the global treasury markets indices. JP Morgan added India in June 24. Now we are getting gradual flows from those ETFs into Indian bond market. Beginning of January 25, the Bloomberg indices will add Indian treasuries into their indexes. So now flows from JP Morgan plus Bloomberg should start from January 25 to indices, and hopefully the largest should add India by June 25. So from June, three indices flow will start coming into Indian treasury markets. That means the treasury are likely to see a lot of inflows. The yields will have a pressure. We have not spent our money on the fiscal side, so interest rates are unlikely to zoom up from here. If inflation remains under control, the 10-year treasury yield should come down. And if cost of capital come down in 2025, as we expect, the industrial and the capex cycle should revive. And if capex cycle revives, the banking and finance sector should do well. So that is the premise under which we are working for 2025. I think it is more than 45 minutes since we started. We have almost answered all the questions. If you have any questions, you can always connect us through our customer care or through our branches. You can write to us, and we will be able to will try to answer as many questions as possible. Thank you for joining, and hope this has been useful to you for making the strategy for next fortnight as well as the stocks to accumulate for 2025. Thank you, Vinay. Thank you, Nandish.
Thank you. Thank you, everyone.
Thank you, and have a great weekend ahead. We can close the call.